Welcome. My name is Montague. I'm a partner at AC Beachcroft, and I'm also a Singapore Insurance Institute Council member, so welcome on behalf of the Institute. Today we're going to be discussing cyber incidents and cyber insurance. We're going to be trying to demystify some of the insurance aspects of cyber incidents. We've got an excellent panel who are going to talk us through the cyber incidents, how they work, the insurance aspect of that, the cover that's available, and then we're going to, towards the end of the session, look at some claims examples. So the session today is going to last about an hour. We're going to have a panel discussion to start with for about 45 minutes. We've pre-prepared some discussion topics, but we're very happy for you to interrupt us at any point throughout the session to ask questions or to participate in the discussion. We're very happy to do that. We've also set aside about 15 minutes towards the end of the session for Q&A, so happy to entertain questions at that point as well. So I'm going to let each of the panelists introduce themselves before we kick off. Struan, do you want to start?
Sure, can everyone hear me? So I'm Struan Todd. I'm the Managing Director and Co-founder of Pandamatics Underwriting, which is a lawyers specialising in cyber insurance only. We are in Singapore and Hong Kong. Our focus has really been to help SME market with their cyber risk in general by providing both insurance and non-insurance services. We work very closely with Blackpanda, hence why I've sat next to Moying, so I'll let him introduce himself too.
Thanks, sir. I'm Moying Chap. I'm a VP loss adjusting for Blackpanda. Blackpanda is primarily an incident response firm. I joined them a year ago. Before that, I was on a specialty lines loss adjusting, so handling fin lines mostly, but also cyber cases in the region.
Thank you. Hi everyone, afternoon. My name is Deborah Thomasz. I'm in Lockton, Singapore. I mainly manage the Profin book. I have over 10 years of experience in the financial line space. In the recent couple of years, because of COVID as well, I think the acceleration of cyber topics have come up. So I'm happy to be here. Thank you.
So I'm Guang. I'm a senior associate at Clyde & Co, an international law firm. So I specialize in technology, media, and telecommunication, data protection, cybersecurity, as well as digital assets. So in terms of cyber attacks or data breaches, this is something I'm familiar with, whether we're talking about post-incident matter or pre-incident, trying to get the house in order to ensure compliance is at the highest standard. Thank you.
Great, thank you all very much. Thank you very much for introducing yourselves, and welcome again to everyone else. So we thought we would start today by providing an overview of cyber insurance and what it covers. There's been a lot of changes to the cyber insurance market in Asia over the last 5 years in particular, and so we thought we'd just start with an introduction, an overview. Deborah, do you want to start with that?
Sure, sorry. I think the cyber policy is unique in the sense that it actually has two parts of the policy that would help you for first-party losses as well as third-party claims. And it goes beyond just indemnifying you when you have third-party losses, because it covers you for, if let's say you're a policyholder, when you incur your own expenses, that first-party coverage of that policy would help to cover your costs in the event when there is an insured event where you need to incur costs to hire incident response, forensic accountants, or even to look at like data restoration costs. The other part of the policy would then be the third-party coverage, where in the event where individuals or businesses bring claims against you for alleged wrongdoings, then that part of the policy will pick up coverage.
Excellent. Anyone else?
Yeah, I'll add to that. So my background prior to leading Pandamatics Underwriting was a broker specialising in cyber risk as well, so a similar role to what Deborah did out of the London market. What the policies at that point in time were really focused on was preparing for GDPR and making sure that liabilities or third-party costs associated with that were covered in some format. What we tended to see as soon as GDPR came into play was that the actual benefit of a cyber risk policy was the first-party coverage. So protection of businesses, helping them get back up on their feet as quickly as possible, and a number of different additional values for those businesses to make sure that they were operating swiftly and efficiently. So when we talk about the first party costs associated with it, we talk about forensic experts coming in and finding out what's happened in the event of a breach, understanding how to get a business up and operating swiftly, dealing with ransomware negotiation, making sure that any financial loss or business interruption to that respective business is covered under the policy. As we touched on the third-party liabilities, obviously a cyber insurance policy is meant to give access to lawyers and professionals in that space to give guidance, able to notify regulators about what's occurred, and then making sure that both the clients of the businesses and the businesses themselves are covered in some format to make sure they're not experiencing any financial loss due to a cyber breach.
Excellent, thank you. And if I can just ask a quick question to follow up to that. Do you find that clients, the insureds who are buying this policy, is there any one particular aspect of the cyber insurance policy that they're most keen about and that they're asking the questions?
I'll go first. I suppose it differs by industry segment and also revenue type and type style of operation. So we see a lot of businesses who hold government contracts, pushing far more for liability requirements, making sure that there's third-party coverage involved. When we look at your typical SME, they're far more concerned with their own first-party losses. You know, they want to make sure that they're fine to trade straight away, that they're not losing any money by not being able to do their typical operations. So it does differ. Some businesses see value in the whole proposition. Some try and carve out elements that they think are going to be useful just to them. What we try and do is make sure we're adding value to all of those respective businesses.
I think to add to that is also where the clients see they operate their businesses in different jurisdictions. I think especially in more litigious environment, the third-party coverage would then be frequently more dependent on. But I think in Asia, we see that the clients are more focused on the first-party coverages.
Yeah, that makes sense. And just one more question before I let you guys off of it. Where are you seeing the most policies sold in the Asia region? I appreciate this might differ from broker to broker, underwriter to underwriter, but just, general.
Yeah, our answers are probably very different. As I said in my introduction, we focus heavily on the SME market segment. We have started to deal with the bigger businesses as well as we grow through our second year, but we focused heavily on Singapore and Hong Kong domiciled businesses rather than the whole Asian region. So in Hong Kong, we typically see a lot of the asset managers, hedge funds, those kinds of businesses want to buy cyber protection in some format. In Singapore, we see a wide variety. It could be education sector, engineers, professionals in general, construction, manufacturing, differs drastically. The ones that we do see that we don't actually manage to provide that much insurance to, but there's a big growth opportunity, I think, for the market as a whole, is that fintech segment. There's a lot of new businesses opening up in that space, looking for forms of protection, and a lot of insurers just aren't comfortable with the exposures as of yet.
I think for myself, because I'm just overseeing the Singapore market, my past life, there has been increasing inquiries in like Japan and Korea. I think it's an upcoming topic for them in that region. But as for Singapore, right, the industry that are inquiring more about cyber is actually the fintech. I mean, because I think requirement wise, they would need it for investors who want to actually put money into their businesses.
That's great, thank you very much. Before we move on to the next question, is there anyone in the audience who would like to ask a question at this stage? Okay, great, we'll move on. So the next topic that we wanted to discuss was the impacts of cyber attacks. So I guess what sort of cyber attacks are you seeing, and then how does that impact companies and businesses?
Well, I see that as a loss adjuster, so the insured loss that we see coming, but also since I joined Blackpanda, also from our incident response, I think the main type that we see is still the same, is either business email compromise, so the email systems that are being hacked, there's something suspicious, and the other one is the typical ransomware. There are all type of suspicious activity that is happening for the bigger accounts, where they have all the alerts in place, and these can trigger a cyber event for which they want an investigation to be started. For business email compromise, I think the impacts to the victim or the insured is limited to their email exchange or cloud, like Office 365, especially during the investigation part. So the suspicion things that they see mostly is that an email has been sent to their vendor or client or accountant that was not originated from them, and this is how the incident starts. But then the investigation is mostly focused on how the parameters, what were the emails, were there some deletion of emails or thing like that. And then the financial impact on businesses comprises mostly loss of funds, so they've been paying a fake invoice and the wrong bank account. Whereas ransomware, the impact is the ransom, but also all the servers that were encrypted. So you have this concept of total extortion, is that the attacker will first encrypt the servers to put pressure on you, and then they steal data, they exfiltrate some data to say, if you don't pay, I'm going to release it to the dark web, to the public.
So we don't take it first, they wait till you respond.
It can be both. So basically, when we start the investigation, what we see is that, oh, it's encrypted, there is a ransom knot. And then when you start the investigation, you discover that some servers of some data were leaked. And this is where you confirm that the data, there is some data leakage. So depending on the type of incident, the impact to the victim can be very different. And the scope of the investigation also can be very different.
So, just to add on, I think Moying talked about ransomware attacks, as well as business email compromise attacks. I think there are actually other types of attacks that are more prevalent, but just that maybe they didn't hit the news that often simply because they're not sexy enough, for example. So actually, I think the recent study showed that BEC attacks are more prominent now than ransomware attacks, simply because the victim that's so embarrassed to admit that they were foolish enough to click on the link, for example. Other types of attacks I've seen personally would be, during my practice, is introduction of malware. So it can be as simple as I've seen where the hacker drops a thumb drive in the company's car park, and somebody picks it up thinking, hey, who dropped this? Is it from my company? Proceeds on to his office, plugs it into his computer, and voila, malware is introduced. So that is one typical. Another example that we usually see, but is more classical, would be the distributed denial of service attack, or DDoS for short. And I always like to give an example to describe this. Is I remember one of my ex-partners in another law firm, how he used to give an example is he literally pushed a trolley of letters into the court to demonstrate to the judge this is how it works. Because overloading your office full of requests or letters, so in that sense, it actually overwhelms the system and therefore weakens the overall system. So those are some of the other more common attacks which, depending on the policy coverage, might fall under as something that is regarded as a cyber attack. So regarding implications or consequences, I think the typical ones fines, regulatory exposure, but more importantly, I think more often than not is the reputational exposure that people are more particular about, because that would actually point the direction as to the certain course of action. For example, if it's a ransomware attack, should I pay just to keep things quiet? Or if it's something as benign as introduction of a malware, but it somehow weakens my system, what do I do next? So I think it's this implication consequences that actually directs the insured, or in some cases the uninsured, in thinking what to do next.
Well, that's really interesting. From a legal perspective, you mentioned regulatory investigations. Can you just give a high-level overview of maybe a more benign, what a benign investigation might look like to sort of a full-blown, a bigger, more intricate investigation?
So I think complex investigation would actually involve more than one jurisdictions, for sure, simply because if it involves more than one jurisdiction, more than one country, we're talking about more than one regulatory obligation, not in respect of, let's say, for example, the Singapore's PDPC, but let's say, for example, the UK's ICO. I think these are the complexity that comes along with multi-jurisdictional incidents. And then we, of course, have the more, the simpler ones, but no less deadly. It would be, for example, like BECs. So very recently, we have encountered a BEC incident where simply the victim transferred money to a fraudulent bank account. So that in that sense is very narrow, very limited. It's just in respect of the Singapore PDPC, if there's any personal information that was exposed as a result of the incident. So just a juxtaposition of a simple incident versus, let's say, a very complex multi-jurisdictional one.
Great, thank you. So we've talked about the types of cyber attacks that can be seen briefly and some of the impacts to the insured. And the next topic we wanted to move on to was how you quantify those losses. And if I can hand over to you, Moy, to talk about that.
So yes, it's really depending on the type of incident. There are some the first party aspect of the coverage which are quite straightforward. Basically, there are all those invoices from contractors. So IT contractors, the investigation costs can be quite hefty in a claim amount, and those basically the work of the loss adjuster is quite simple in that sense. You only have to verify that the cost claim are related to the incident and they are not claiming for something else. I think the more complex type of cost is everything related to the business interruption when there is one, knowing that for that part you have to wait until the incident is resolved, the business is back, to have a proper view about the actual scope of the loss. On the more technical type of costs, everything related to the restoration, remediation is quite big, especially when you have multiple systems that are being investigated and multiple systems that are compromised. So there really are two types of impacts to the business and associated costs. Is that sometimes the investigation needs to review the whole network and all those endpoints, and during that time, and you can't use them. So you can have like mitigation costs that you need to pay, like rental of servers or rebuild urgently some of them. And you have the restoration costs, which are limited to the actual servers that have been compromised. So you, at the end of the investigation, you have to separate what has actually been compromised, what was blocked and has to be only because it was part of the investigation, and what was part of making sure that you don't have a further attack after the first one. And of course, we have to assess that depending on the policies, because they respond differently, and sometimes the definition of what is a remediation, what is containment, do we cover betterment or not, might impact the type of quantification and what we need to be doing.
How is that separated in invoices, or how do you manage that?
Yeah, so today the insured usually push everything in the claim and they say, I would like that reimbursed. And the work of a loss adjuster is to say this could fall under that coverage, but sometimes the same invoice with a very big amount has to be split among different coverage, because everything related to a service replacement could fall under restoration if it was compromised. But if it wasn't compromised, then maybe it's okay to indemnify that only because it's a mitigation for BI. So you have that kind of aspect. One thing that I didn't touch upon is everything related to data privacy. So all the costs related to the legal part, the PR part, the notification, and the potential fine, regulatory things, this could be also different from the aspect of the total loss.
Thank you very much. Back to quantifying losses, what are the largest elements of cyber claims that you're seeing for the whole panel? Is that the IT forensic costs? Is it legal costs?
So in the case I've seen, the third-party aspect, honestly, I haven't seen huge claims. The only claims I saw that fall under the third-party aspect of the policies were when the IT system of the insured were closely connected to the IT system of the clients, for example, in the supply chain. And basically the BI that was the victim was suffering was actually impacting the operations of the third party. In that case, so we had a case where it was a logistic company, but they were handling frozen food. And because of the interruption of their business, basically they had to throw away their customers' products. You have that kind of claims on third party. But the biggest part for me that I see is all on the first party type of losses. When there is a BI, obviously it's the BI part. But what I see from my experience, actually the investigation costs are quite big. Sometimes there's no end to it because you can continue digging, you want to see more and more. And when do you reach a level where the insured feels comfortable stopping the investigation, knowing that they expect the insured to be paying for them? So this can be very, very big. And the other thing I see for especially work-intensive type of businesses is the BI type of losses, more the increased cost of workings. So they have all the company doing overtime, weekend, extra shift and everything to make sure that they have to do everything manually without the IT systems. And then this can be a very big aspect of the cost as well.
So I think Moying touched upon many aspects in terms of what he sees in claims. Just want to raise one interesting case that came about where, in terms of the investigation, was fairly short, and the reason was because the victim decided to actually accede and pay the ransom. So in that particular incident, it was with a twist because the biggest claim came from the payment of the 10 Bitcoins. Of course, that was 2020, so the value now must certainly have dropped. But in that instance, it was a case where, hey, it seems like not really about the legal assistance or the forensic part, because in terms of the payment of the ransom, that made up the majority of the claim. So that was an interesting one, quite unlike most other incidents that Moying have mentioned.
Great, thank you. Anyone else want to?
Yeah, not to actually. One of the reasons I do a fair bit of business with Clyde and Co in general is they helped me out with a claim when I was a broker. So I placed an Australian account when I was still in the London market, a big valuation company, and they had a cyber attack that affected all of their systems, and their main operations were really property valuations for lending purposes to banks. As soon as they'd had this cyber breach and it became public knowledge, every bank switched them off. So straight away, they were no longer getting any work through any of their partners. Cash flow goes to almost zero. Business interruption loss is massive. Reputational damage is massive. Total limit loss within the first 2 days, and this company was buying double digits. So there are circumstances that can occur for businesses of all sizes that don't necessarily think they're at risk, but they're like, I've got a robust system, I put everything in place, I do the right processes, but they can still have one incident that could be as benign as dropping a little drive to now being a complete shutdown of the business within a week or two. So they ended up going through different stages of getting additional funding, finally got switched on by banks, but by that point in time, the business as a whole is ultimately shot.
So in my experience in 2020, when it was locked down, we actually assisted a client who had a small subsidiary based out of Singapore, and interesting enough, their systems got compromised by the Maze ransomware. So I'm not sure whether you're familiar with it, but it's a really malicious malware that will attack your entire system. So it kind of corrupted their whole computer network, exfiltrating some of the information to the threat actors, and they were actually demanding for a ransom to be paid out before they can then release the information. Or if they don't pay the ransom, then they'll leak out the data into the dark web. So what happened was the client, as usual, was very, very frantic, called us up, asked us what to do, and we then got in touch with the incident response coordinator. So in my personal experience, I feel that the incident response coordinator as a law firm is great because it then establishes the client privilege. If let's say you go into litigation, what happens was the lawyer then engaged different working groups to get everything on order, the forensics, the PR firms, all the various individual companies that need to be involved in the entire working group of finding out what's wrong and what needs to be done next. Because this particular subsidiary was based in a very litigious environment, the notification to the regulators and the time frame that we're working with was very, very, very strict. So the first-party losses was immense, so much so that I think it was in the millions. But the thing is, we managed to get everything in order. We took assistance from the lawyer to then draft up the letter to notify the clients.
Thank you very much. Any questions from the audience?
I'd like to ask one question. It's more on cyber attack and maybe the coverage side of it. So normally talking about cyber attacks intending on one particular client maybe, but let's say it's a state-sponsored attack attacking one particular country. It could be classified as an act of terrorism. So what are your thoughts on the coverage? The cyber policy would respond, or it will fall back to the maybe separate policy? There will be legal implications again. I don't want to go into that, but have you encountered such situations, and what are your thoughts on that?
So obviously quite a contentious issue for us as insurers or underwriters at this point in time. The stance towards it is we are given guidelines by regulators that we have to follow, and we aren't able to just automatically pay all claims if we think they are tied to state-sponsored attacks. What happens in practice is we will undertake everything that we typically do for all types of clients. We'll make sure we get them back into as close as possible to where they were before. But ultimately, we will have to decide whether it is a state-sponsored attack, which we can find out in a lot of circumstances. Forensic experts do find their way, do see the same kind of attackers on a regular basis, do understand their behaviour on a regular basis too. If it does come to that stage where we're fairly sure of that circumstance, we do have to avoid making those payments. In practice, a lot of the work is already done, a lot of the payments are already made before you get to that point, so it would be quite hard for us as insurers to avoid paying those claims. But the intention is, and the guidance from the regulators is certainly that that's the approach that we have to take. Now, I don't know whether Deb's got different views based on other insurer responses, but that's certainly the way that we look at it from our stance.
I think I echo what you say. So, to act in the interest of the client, of course, it makes for the policy to be coming into play, right? We would definitely, if there is any defense cost involved, and if let's say there is any cost needed to bring the client back on their feet, as a broker, we will try to assist that management.
Excellent. Thank you very much. We want to move on to another topic now, and you might have heard the term silent cyber. And we're going to ask our panelists what are the potential silent cyber issues that can arise. What does that mean, and what can be done about that?
So I'll go here, but I presume you'll probably have some commentary on it as well. It was a far bigger issue a few years ago, but it is still something that comes up in a number of discussions. Is that a number of businesses think they're protected for cyber attacks under other insurance policies. So they might buy a property policy and think that if there is a cyber attack that causes property damage, they're going to be insured for that under that property policy. Now, the intention of those underwriters when they were putting that policy together was certainly not to be providing cyber coverage. So what we're seeing now is a lot of the regulators are still pushing exclusionary language to make sure that we are very clear on our stance in various different lines. Some outdated policies are also having guidance towards it where you can't be making generic claims under the policy. There's some lawyers who are trying to give advice in that segment to ensure that we don't have any grey areas where clients think that they're getting protection but they're not, and then there's problems for brokers involved with that as well. We do see it from time to time where we are talking about the benefits of our cyber policy, and we do see a number of businesses saying, I do have coverage under this kind of policy. What we're, depending on the broker market for, is to explain what triggers actually are involved, how that cyber actually interacts with what they're expecting. For example, we have PI and D&O policies which might have extensions for cyber, but it might still necessitate a third-party claim for that to respond to the cyber event. So we expect that kind of guidance to the clients first. Realistically, the market as a whole has taken steps towards addressing it as best possible, but will continue to do so because there will be new cases and new types of insurance as we progress.
I think to add to that point is back on the property insurance policy. How it is being worded is there is insured perils as well as like property. That was the definition of property. So initially, many years ago, when brokers tried to park it under the property insurance where cyber is supposed to be covered, right? Property is defined as tangible assets. But for data, how do you actually assess whether is it tangible or intangible? Definitely intangible. If let's say you have an insured peril, let's say for example fire, your building catches fire, your computers get burned down. Does it mean that the data being leaked there is covered as insured property? No, but they tried to angle it that way. So I think as the insurance market evolve, the insurers are getting smarter, and also because they're being backed up by the regulators, right? So they then slap on an absolute cyber exclusion, saying I'm not going to pick up anything related to that. You need to then purchase a standalone cyber policy that should be more fitted to cover your needs.
Excellent, thank you. Anyone else want to comment? Great. Right, we'll move on to another topic. We'll just talk about breach response service or incident response manager. And perhaps the panel could talk a little bit about what that is, what that means, how it operates, whether all cyber policies have access to one of these, and maybe some of the parties involved in that process.
For Blackpanda on incident response, I think it's a basic thing that people are looking for in cyber policies is access to professionals to do the incident response part. I suppose the market looks the same. I think it's really depending on who they have on the panel and how they want to organize the work when there is an incident. So there are several aspects to it, with the notification, the hotline, whether there is a privilege or law firm involved, whether there is a breach coach, and then the different type of panels. But yeah, I think it's pretty stable in every cyber policies.
So we do ours slightly differently, which I'm surprised you didn't touch on here. The majority of the insurer market uses a breach coach. So they do have a law firm or a loss adjuster who typically plays the guidance role to the business when they're having a cyber attack. There's big value in them. I think they're very good at what they do, and in times of emergency, they are fantastic in helping those businesses. I had some poor experiences when I was a broker about how long it took for anything to actually happen of benefit to the client. Also, I was left in the dark an awful lot, where you were waiting for guidance from that breach coach about what was occurring, who was being involved, who was actually talking to your client, what had actually happened, and at that stage, your client is also coming to you saying, what's happening with my claim? So when we set up Pandamatics, we took a very different approach to that, and obviously that's because of our relationship with Blackpanda, was let's put the customer first here. You know, the first thing that they really care about is finding out what's gone wrong and operating as swiftly as possible. They don't want to know exactly what insurance is doing, who else is helping them in the background, what they need to deal with regulators. They just want to get operational as swiftly as they can. So we put forensics in first. They do their initial triage, dive into what's happened, try and solve the problem, and then we still defer to all of the experts in their respective fields to be able to help us out in those occasions. If there's data exfiltration, absolutely lawyers are involved. You know, we want them to guide the client, let them know what the notification process is, ensure that if there is something substantial that could lead to a fine, they're getting the right guidance. If we need loss adjusting, we do have those capabilities in-house with him in Blackpanda. But if there's a number of different things that come involved in that process, we obviously need to make sure that the correct calculations are made there. PR consultants are the same thing. You know, we need their guidance and advice to tell newspapers, tell clients, tell customers exactly what's occurred and what to avoid in the future. So we certainly see that first-party coverage as imperative. We just look at it in a slightly different way to make sure that the businesses are put first rather than the insurance mechanisms that support them.
Anyone else want to add to that? Is that a service that they expect with their cyber insurance, or that they ask for? And in addition to that, they always want to engage. Are they happy to use the panelists of the incident response manager? Are they happy to use the vendors that are part of whatever's offered under their policy?
I think it varies. So there are some clients that are happy to just use the panel of vendors that is already tagged onto the policy. I have had experiences where clients actually dictate what vendors they want on the program, and some insurers are open to the discussion, some are not, because I think they go through a really tedious process of picking up the particular vendors that are part of their policy. They go through like qualification analysis of where their capabilities are and the hourly rates they're actually giving to the insurers on the policy. What is interesting is the insureds see value in their cyber policy. So there's questions that I get asked is like, how do I know that, who should I get engaged with? Let's say I do have an incident, cyber incident. So unbeknownst to them, there's actually a hotline that you can call. So it's really real. It's not like a piece of paper that I buy because I need to take out my contracts. So when I'm having renewal discussions with clients, I actually bring them through the case process. I let them know, like, okay, if let's say you have this particular data breach, what do you do? You call me in of course, and then I will engage your incident response coordinator, and then you take it from there. So interesting enough, last August, I found one of my renewals is a logistic firm. 1st August was the policy inception. 6th August, an incident happened. Like, wow, it cannot be any better. The good thing about it is it happened to one of the tiny subsidiaries, and it was kind of contained because only their, I think it was the HR internal drive that was compromised. And the ransom demand that was asked was like 12,000. It probably was a kid at his mother's basement, like trying to play punk with, trying to earn some money.
I'll add to that as well, if you don't mind. Sorry, I'm talking a lot here. I think what we typically see is SME businesses don't really ask too many questions. They want to see that there's a product and a solution, so they care about the incident response line. They care about knowing there's some names there that they can call or get support from in the event of a claim. When you look at mid-market or higher, which is obviously a number of your clients, they can be quite sophisticated buyers when it comes to cyber risk. So they may well have an incident response company on retainer to be able to help them, which they may ask us as insurers to consider having on our panel. Now, realistically, there are a number of considerations for us to take into account before we make a decision on those. And that could be hourly rate, it could be scope of service, and it could also just be our willingness to trust that they are going to do only the job that we're asking them to do. Because often there will be a case where forensics will say, this needs to be done, and then tell their clients, oh, but you should also do this while you're at it, and you could also do this to mitigate having a future claim, and you should also do this, and don't worry about it, the insurer will pick it up. And realistically, that's where we have problems with it. So our stance at this point in time is, if we're at the stage of negotiating on these larger clients to bring in a different panel partner, fine, very open to that discussion, as long as we're on an open keel. But I don't want to do it when we're having a claim, because that happens a lot, where suddenly the day that it happens, they've got someone who is on retainer and they're now handling it. It's like, well, I didn't agree to any of their costs. I don't know what they're doing. They haven't spoken to me at any stage. Also, we have Blackpanda here who's actually dealt with this time before in XYZ, and we know that they understand this risk. So I suppose the last point to add to that is there are also a lot of businesses in their respective fields who think they know what they're doing in that circumstance. So they could be very good lawyers, they could be very good cybersecurity companies, but when it comes to actually dealing with an incident that is time sensitive, that is difficult, that is problematic, they don't know what they're doing. And often they can advise things like, just clear your systems and we'll start again, and suddenly all evidence is gone. You know, we can't look at anything there for notification to regulators, we can't ensure that we're happy with making payments for various different things without that information.
Great, thank you very much. We're going to touch on our last topic before we move on to the Q&A section. And I'd like to invite the panelists to share some interesting claims examples that you've been involved with, or incidents, etc.
I've used up all my good ones.
Maybe sharing a case in Singapore, manufacturing company. So basically, they came to work and nothing was working, but they didn't know where it was coming from. So no emails and no ERP. So all the supply chain and the accounting, but also the manufacturing were kind of jeopardized. It was discovered that it was a lockpick ransomware. And the ransom was at the time 400,000 USD. During investigation, what was discovered is that data was exfiltrated, so it was a typical double extortion type of attack. But what was discovered is that the way it was propagated into the system was really manual, and actually the threat actor was targeting some servers which had a lot of virtual machines to have the biggest impact to the operations. So though it was not just spreading and see whatever server was going to be done, there were basically all the lateral movement in the system were really searching and targeting the biggest impact to the operations. So at that point we knew that it was quite a clever hacker. And there was a big ransom. So there was two things going on in parallel. Was all the investigation part and remediation actions, and the start of the negotiation with for the ransom with the threat actor. Finally, on the negotiation part, it was decreased from 400 to 100,000 USD. But in the meantime, all the systems were restored. So then there was a question about whether they were going to leak the data that they had stolen. But finally, part of the investigation was to characterize what data was stolen. So we saw that there was several gigabytes of data that were leaked. But the thing is that the nature of data was not that confidential. There was not any PII or no exposure on data privacy. And finally, in the exchange with the threat actor, it was discovered that it wasn't clear whether they were going to release it or not. And finally, the ransom was not paid, and the data was never published. The impact to the victim mostly was, I would say, the biggest part was the investigation cost. So the total claim was around 1 million, but purely investigation part was mostly almost 25% of the whole amount. And the second aspect that was quite big was all the restoration fee. So there were so many servers, and the servers were quite technical, so they had to basically repurchase some of the servers. There was a lot of mitigation for BI, so urgent purchase of hardware. But then on the data privacy part, it was quite small. So there was some a law firm involved, there was a PR firm involved, and but the costs were quite minimal.
Thank you. Anyone else?
I guess I'll take a step back. Instead of an interesting case that I've seen, it's more of the trends we have seen over the past year. I guess coming from a lawyer's perspective, putting on my lawyer's hat, I guess it's a case of what do we see from an enforcement perspective? What is the regulator doing in terms of the cases that they have been handled with? So I guess I'll start off with, surprisingly, the number of cases since 2020 have dropped in terms of the enforcement decisions. So there were, say, in 2020, over 50 cases. 2021, there was 25 cases, and last year there were 24 cases. In terms of the financial penalties, though, that has increased. So from 2020, it was, if I'm not wrong, 16,000 on average, then 20,000 in 2021, and then last year it was on average 27,000. So all this is, of course, in same dollars. I guess what is interesting, though, is the industries that have been affected most in terms of the enforcement decision. Because that is something that people would like to know, hey, which industry has been hit the most? Is it, for example, banks or non-profit organizations? So I think, unsurprisingly, the first would be business services. So whether we're talking about an accountant, insurers, a law firm, in fact, law firms, their security portion, surprisingly, be not the most secure. Second would be retail, of course. Retail, I guess, simply because the number of touch points, where they deal with a customer, a business partner, and naturally there will be more avenues for a hacker to actually exploit. And the third one would be, if I'm not wrong, banking and financial services, simply because of what's at stake. If I'm a hacker, I look at the amount of pot of gold they have over there, I'll naturally try my luck, because whether I'm talking about what I can get out of it in terms of sensitive information, or whether the tendency or the possibility of the person paying the ransom is higher simply because you have more capital. So that's what we notice in terms of like the three most industries that have been hit so far in terms of enforcement decision. So going forward, what we believe is that based on, informal discussions internally as well as with peers in this practice area, is that in terms of internet-facing platforms, naturally, we tend to see more incidents happening from there. The other thing is also in terms of AI-related stuff, simply because of the explosion of ChatGPT. So in terms of more applications, when we're talking about a platform or mobile application, you'll see more of such incidents relating to AI apps or AI platforms. And what I mean by that is simply because people are more curious when they see something that's AI, they just click on it. Or if they see something that is AI related, they will be more interested and therefore dive deeper into it. And so in that sense, it opens more opportunities, I guess, for hackers, threat actors, state-sponsored actors even, to actually exploit this. So I guess from an insurance perspective, what I would say is not only in terms of the increase in fines, notwithstanding the drop in cases since 2020, but also in terms of the nature of clients, nature of insured who actually come to you when they want to seek a claim. That will naturally be something interesting going forward.
Very interesting. Thank you very much. And just related to that, you mentioned the sort of increased fines and regulation. Are you seeing that in other parts of Asia, or is that a Singapore-specific phenomenon?
So in Australia, I think there is a classic example being the APAC region, where due to the high-profile incidents, the government, if I'm not wrong, they are planning to present their privacy laws to ensure higher fines. So that's one good example where you would naturally expect an increase in fines if dished out to organizations that hit. Going forward, around the region, I mean, the typical more matured countries in terms of privacy laws like South Korea, Japan, these are quite listed countries from a GDPR perspective, so we think that in terms of fines, the regulator is more assured in giving out higher fines simply because the honeymoon period is long over. For example, if I'm not Korea, their privacy law has been around since 2011. So I mean, clearly, if they're going to dish out any amount of fines, it's not going to be what they were dishing out 10 years ago, for example. I would say keep a lookout for the developing countries. At the start, usually in practice, what we see, they use Singapore as a benchmark because of the developments of the laws here, the state of current affairs in terms of maturity. Indonesia, I mean, if you have been following the news, their laws recently have been coming up. Vietnam might take a while simply because it's a bit messy there in terms of development. But I would say just keep a lookout in terms of the developing countries. Thailand, I mean, their PDPA was recently formalized, if I'm not mistaken. So you think that at the start, naturally the amount of fines will be lower, but going forward, similar to Singapore, you will see a spike in terms of the amount.
Excellent, thank you. And does anyone want to share anything else? And one question related to claims is, how long does a cyber incident take to resolve? Is it quick? Is it years?
It depends on the complexity of the case. So, like, if it's a simple data leak, it can take 9 months to a year to actually close off from the time you notify to the actual payout or the resolution of the entire situation. But if, let's say, it's a huge ransomware attack, it can take from 9 months all the way to like 2 years. And because the discovery period of when it happened and then information that gets found during the investigation, like what Moying has mentioned, right? It may actually change the complexity of the claim.
Any final comments before we turn to the next section?